Morning, everybody. Thank you for joining me today for this special episode where we're talking all things compliance. In an era where the regulatory landscape seems to shift like sand, staying abreast of changes is no easy feat. And in today's fast-paced world, staying compliant is not just a necessity, it's a strategic imperative. As the heartbeat of the mortgage industry, compliance is not just a box to tick. It's a cornerstone for building trust, ensuring financial stability, and fostering customer confidence. And compliance is never a one and done exercise. It's an ongoing part of your business. So the key is how to embed processes into your core day-to-day activities to both protect you and your clients, but also to ensure that you're delivering the very best service possible. During this next hour, we'll take a journey into the complex world of mortgage compliance, looking into some key topics such as consumer duty, fair value assessment, lender panel removals, AI, to name but a few. As always, these sessions are always better with your questions, and at the bottom of your screen, you will see a Q&A button. Please use that throughout the event, and we'll cover off as many of your questions as we can. All questions will be dealt with anonymously under the Chatham House rule, so please feel free to ask away. To help us navigate these complex regulatory waters, I'm delighted to be joined by an expert in mortgage compliance, Simon Lovell, Mortgage Compliance Manager at SimplyBiz Mortgages. Good morning, Simon.
Morning, what a fantastic introduction.
As you'd expect, we can't answer specifics as we don't know the full details of the scenario. So all information provided today is for information purposes only. I'm sure Simon and the team at SimplyBiz Compliance Services will be happy to talk you through any options they can offer moving forward for more complex or more detailed questions that we get. So Simon, welcome. Can you tell us a little bit about your background in compliance?
Yeah, good morning, everybody. Thanks, Chris. Thanks, everybody, for joining. I've been about a bit, to be fair. I think the roles that are relevant to this kind of session this morning, I've worked for quite a large network for a number of years, their compliance team, and also providing training and supervision to their appointed rep firms and individuals. And also I've worked for another mortgage club, again for quite a while, delivering compliance support and guidance to directly authorised firms. So that might be visits, it may well be advisor one-to-ones, communications, webinars like this. Obviously pre-pandemic, we had a lot of face-to-face events. And then coming the pandemic, we did a lot more of these webinar sessions. So any updates, anything that was going on with the FCA, file standards, fraud, whatever, just to kind of keep in touch with your members. And one of the key things, obviously, I know we'll touch on quite a few key subjects this morning. You know, if you're part of a network as an AR, you've hopefully got that structure in the background to give you that support, to communicate with you, to tell you what to do, to help you along the way. Obviously, as a directly authorised firm, it's a little bit different. You know, if you're a big directly authorised firm, you may have a compliance member of staff in the business that do all that work for you. But if not, you know, if you're a one-person band, just a few of you, you know, you've got to rely on yourself to go looking about things, find out what's going on. So that's why it is important to join a club. You know, even if you just have kind of limited support, limited compliance support, whether it's just the communications, whether it's just templates, anything, just to kind of help you along the way. And they will obviously just kind of watch you back and make you aware of what's going on. So you can just crack on with your customer. Bit of a long introduction now.
No, that's great. So we've got a compliance department within the business, but we also utilize the team at SimplyBiz Compliance Services as well for additional queries. And sometimes you just want to bounce an idea off someone or a second opinion on something. Because as you say, as a DA, you are responsible for your own compliance. And
that's a good point, actually, because although there is me, we're lucky enough to have a policy team as well that sits at SimplyBiz. So where we have got experts. They're the experts that are looking at what's going on, looking at what's coming down the horizon, interpreting the rules. So from an education point of view, the FCA generally will issue a CP, a consultation paper, which people like SimplyBiz, lenders, firms like you that are on this call now will look at, make comment, pass feedback to the FCA. They will listen to it sometimes and then produce a policy statement. And then those policy statements are generally the rules. So then our policy team will look at those, interpret and see what's relevant, see what's proportionate to the size of the business. Because the key thing, again, with all this FCA stuff is that it's got to be relevant and proportionate to you. A lot of the stuff they kind of issue might just, to do with the large banks or whatever. So we've got to find out what's relevant to you, interpret it, and then just produce it in a communication that you can understand. So, when I go out and about, generally we've had policy people that have kind of done all that, and I basically just deliver the message. So again, in your networks, you're going to have the compliance staff as well to do all that for you.
Brilliant. Thank you. Well, we've got a lot to cover today, so let's just dive straight in. Obviously, you've had a busy few months with changes and various other bits that have gone on. Let's start with the big one, consumer duty. Can you give us a quick update on where we are now? We're a few months into that.
Yeah, I think the key thing is here, and again, I know that we're remote, so it's a little bit difficult to get engagement with people. But when we did some road shows actually back in September, probably did about a dozen road shows across the country, and obviously consumer duty did form part of that. It was a couple of months on, now it's 3 months on. But I would start by saying to the audience, and I know you can't answer me, but if you were to get asked a question in one kind of answer or one sentence, what would you say the consumer duty was designed to do? What was its aim? What was its objective? And it's important that you reflect on that and have a little bit of a think, because you may get asked that question. So hopefully you've answered that somewhere along the line. But some of the answers I was getting with was TCF on steroids, for example. That was a good one. The key phrase here is about achieving good customer outcomes. So that kind of good customer outcomes phrase is kind of woven throughout all the FCA speeches and paperwork. So whatever you're doing, you're trying to achieve good customer outcomes. You might be thinking, I already do a good job. Yes, you probably do. That's why you're here. But this is about building on that good job that you already do. So raising the bar was another phrase. So we've got all these cross-cutting principles, and I know all that, but it's about achieving good customer outcomes, making sure your files are solid. We're going to kind of come on to record keeping in a moment. But a few months on, now, for those who are not aware, the FCA issued 10 questions, a bit of a self-audit that you should look at. Now, if you don't know about those 10 questions, message me afterwards. They're like a bit of a self-audit to ask yourself, ask yourself about questions on how you are getting on. Now, we provided answers for those as well, guidance along the way. But have a look at those. They're like a self-audit to help you identify any gaps in your processes. So remember those 10 questions. Look at those or let me know. Coincidentally, there was a speech, which I'm going to refer to a couple of weeks ago from the FCA, which I've had a look at. And I was going to pick out some key things for that, because a few months on, where are we? Well, how do we know? And this is important to the FCA that they introduce these things. We want to know, well, how are we getting on? This is not just a one-stop shop. This is an ongoing, evolving requirement, okay? The consumer duty speech was titled "Not Once and Done." So that just about sums it up. So they talked about 3 months on, where are we? Now, the FCA, don't quote me on this, it's highly unlikely at the moment they will be kind of contacting probably firms that are on this call in terms of smaller firms. They'll go in at the bigger firms first of all. So they talked about good and poor practice. So, I mean, just for example, a bad example where somebody apparently had lost a partner. They tried to speak to the bank, but they couldn't speak to them because the person that dealt with bereavements was off that day. So they were told to ring back the next day. So that's pretty shocking, really, isn't it? So again, these are examples that might kind of happen in the bank, but they're just examples that happen. Somebody bought a car insurance policy, tried to cancel it. The only way they could cancel it was calling. And when they did call, they had to wait for more than 20 minutes before getting through. So all these kind of things are negative points that happen throughout the sales process. So they gave those as bad examples. However, there were good examples. So, for example, for firms simplifying languages in their letters. So looking at what you do, your suitability letters, your disclosure documents, when was the last time that you reviewed those? Anything that you give to the customer, is it clear? It might be clear to you, but is it clear to the customer? Ask a member of your family, does it make sense? So firms being more upfront on their website about exclusions and fees, fees being a topical subject at the moment. So they gave good and poor examples. But again, they're saying it's not a one-stop shop. It's an ongoing thing. So include it in your businesses, in your business meetings. And this is typical. They mentioned the annual board report, but obviously firms on here aren't going to have an annual board meeting, probably. So any kind of team meetings you have, bring consumer duty into it. An annual review. SimplyBiz at the moment are working on an annual review document where firms again can carry out a self-assessment on their businesses. So, have you carried out a gap analysis on your firm? They talk about a shift in culture, okay, a change in behavior. So again, the way you communicate to customers to make it more easy for them to understand, adapting and amending your processes. So it's an ongoing thing. It's all about delivering good consumer outcomes. So all I can say is at the minute, any kind of thing that anything that comes out from the FCA, SimplyBiz to our members will communicate, interpret, and let you know what's going on.
Thank you. I think a couple of points that you mentioned in there. It feels like this is more about good customer service. Good customer outcomes is great and how you deal with them. But ultimately, if you're dealing with people the way that they expect to be dealt with, the way we would expect to be dealt with if we were customers, it seems like you can get a long way of the way there with that.
Sorry, repeat that last bit again for me.
Yeah, if you deal with customers the way that they expect to be dealt with, you're available, you provide information, you're open, you're transparent, you're honest. It feels like you're a long way of the way towards achieving some of these outcomes that consumers use.
Yeah, I would agree. And it's things that, as I said, we refer back to these 10 questions. That one of them talks about communication. So, are they aware of the hours that you're available? Post sale, it's not just about completion either. You talk about the customer journey, end-to-end customer journey, very important, very clear, be transparent all the way, be available for them, help them out. But obviously post completion, when do you speak to them? Do you leave it for another 2 years, or do you contact them on an annual basis? Say, for example, protection. We always go on about, we focus too much on mortgages, or a lot of firms do. We don't talk about protection, the holistic approach. So we might provide them with a protection product, but then how often do we review it? Do we just leave it, or do we review it annually? Because obviously circumstances can change. When we do a product transfer, we can talk about protection. So yeah, you are right. We're trying to make that customer journey, end-to-end customer journey, as clear as possible. When was the last time you as a business, say, for example, talked through your sales process with everybody in the team? Even if I've seen firms put on post-it notes and talked it through, how can you improve it? How can you make it easy for the customer to understand? And another thing, administration staff. Administration staff are key to your business. If you hear administration staff having a bit of a whinge about something, about an advisor, about a process, about your CRM, don't ignore it. Take it on board. That again is just helping you evidence customer outcomes. What changes are you making? Have you made any changes to your sales process? If so, record that. It's all about evidencing the good customer outcomes.
The process one is a really good point, because we did that a couple of months back ourselves. We tried to map out on the wall, post-it notes, what the customer journey was. And it's a little bit complex for us because we operate in 6 specialist business types, so they're all slightly different. But I can't even begin to describe how many post-it notes suddenly started to appear on the wall when you start looking at all the nuances. We thought it was a really simple, straightforward flow. And then you think, well, actually, we end up doing 5 steps here that we can try and strip out. There's 3 here that we can strip out. And you just get creeped, don't you, as your business continues?
Yeah, that's a great point. About stripping out things that you don't need. I mean, when I talk to firms as well, I mean, we have a number of field staff anyway that go out and see firms, but things like when they say, oh, we ask the customer to sign the disclosure document. You do not need to ask the customer to sign the disclosure document. If you want to, fine, but you don't need to. Signing suitability letter, it doesn't need to be signed. So these kind of manual processes that can delay things and cause confusion, or a bit of anxiety with the customer, you don't need to do it. Your sales process, we talked about displaying it on the wall or whatever, fine, but most firms should have a sales process document. When was the last time it was updated? It should have been updated this year, let's face it, leading up to the Consumer Duty and post, and not just a one-stop shop. All these things now are just ongoing on an annual, at least on an annual basis.
Thank you. We've got quite a few questions that have come in advance, which is brilliant. So thank you to everyone that's put those through. We've had a couple come through this morning as well. Please use that Q&A button. This session works better if you're asking questions and we can provide the content that you're looking for. So one question that we had previously, what records do I need to keep under Consumer Duty? Right, yeah, good question.
And this is all about, remember that phrase, achieving good customer outcomes, but evidencing good customer outcomes as well. So your management information, you'll hopefully hear that when people talk about Consumer Duty, they'll refer to MI, to the management information that you keep. There are various ways you can evidence those outcomes. Let me just start with your new business register. Funnily enough, I was at a mortgage showcase event yesterday at Bolton Football Club, where we were lucky enough to kind of have some key industry personnel on there. They talked about MI. So think about your customer journey. I'll come on to the new business register in a moment. Think about your customer journey. So you get an inquiry. Does that inquiry then go to fact find? You complete a fact find. Does it then go to application? You submit an application. Does it then go to completion? Think about those stages. There are all the stages within, but if not, why not? Is there something that you're doing that is causing the case to fall or not go ahead, or where you can improve things? But if you don't record that information, how can you improve? How can you get better? So again, that's something, if you get the time, we know, there could be a lot of sole traders on here who don't get the time to do these things. But think about your new business register. I quite often have one-to-ones with advisors where we provide a service where we'll have one-to-ones. They submit the new business register data to us. We dissect it. We talk through it. A lot of the new business registers that I see are very weak. So review your new business register. Do you have your lead source? Where did your business come from? Can you identify any trends if there are issues? Do you have things like your product type? Okay, is it fixed? Is it fixed? How long for? Do you identify risk areas? Do you identify if your customers are vulnerable? All this is about beefing up your management information within your business so you can present and discuss better MI with your colleagues or the FCA if you have to. So again, if your cases do not proceed, why not record that? Identify any trends. Are there any training needs that are required? Persistency. So again, sorry, I'll just carry on talking, Chris, until it's time to stop. Persistency. So again, your protection case is remaining on risk. I still see, and I'll bang on about, I'll bring it in now. I still see firms that do not do protection, do not do a proper job with their customer. That's when I say that's fine. If you identify it, that's fine, but refer it. We've got this is not a plug. This is just an option. Our members, if they do not do protection, we say, well, don't worry about it. Refer it to our partner Caspian, and they will take it on board. Refer it internally to a protection specialist. But the point is, do a proper job. This is again, dare I use that phrase, preventive foreseeable harm. We don't know what's going to happen in the future. We need to talk it through with the customer. If they don't want it, you're not interested. Tell me why you're not interested, please. Record those words somewhere. Protect you as well if something was to happen. Slightly went off on a tangent then, but it's all relevant. So persistency, keep a track of why the cases are dropping off. So again, it's just trying to keep an eye on what's going on within your business. So your management information is crucial. New business register. We've talked about sales process. So again, documentation that you have, a compliance monitoring plan. What about a T&C scheme? Your documentation that you had, it's not just a one-stop shop, as I've said, it's an ongoing. This is just helping you kind of evidence those customer outcomes. Another thing, staff feedback. Staff feedback, again, is fantastic. But we see far too often stars, 4 out of 5, 5 out of 5. That's great. But what about commentary? Where the words, the customer's actually giving words. That's more important for me than stars. Stars obviously complements the words. If you can get that commentary, even better. Share it. And then also, so we talked about feedback. Have you got something like a vulnerable persons policy as well? When was the last time that was updated? It's just updating the paperwork that you have, really. Again, a long answer, but hopefully just kind of putting that across. Sorry.
Ultimately, it comes back to
yeah, no. And one more important. Well, they're all important, but of course, your files. You know, when you have your files reviewed, and I'll come on to file reviews when we talk about lender panels, lender panel removals. But file reviews, if you're getting suitable, if you're getting suitable files assessed by your network or by your club provider or by a colleague, if they're suitable, if the advice is good quality, they're coming out as suitable, whatever phrase you use, that's evidencing good customer outcomes as well. If you're continually getting poor files or unsuitable files, there's an issue that needs to be addressed.
Thank you. It goes back to evidencing, doesn't it, ultimately? How can you evidence what's being talked about? And we've had a follow-up question on the disclosure document that you mentioned earlier.
Right, okay.
If the customer doesn't sign it, how would a broker evidence the client's consent? Is verbal, is email sufficient?
Okay, right. I'm going back and over we can get consent to what?
More about the disclosure document, confirming that the client's received the document.
Yeah,
That's just
okay, that's fine.
So they've acknowledged the information in there.
Okay, no, totally get that. So what we've got to step back is now, rewind back. We used to have an official IDD document from the FCA, official template that we all used. They removed that template and just say, do what you want. 99% of firms still carried on using a disclosure document, which for me is the right thing to do. It sells your services. You can plant the seed about protection early on, talk about your fees, be transparent. So if you're not going to get the customer to sign it, you could email it to them. Okay, that has a record of it. You can make record to your disclosure document in your suitability letter. You can, any conversations that you have with your customer, did you get the disclosure document? Did it make sense? Make a note on your file. So there are ways of doing that, of demonstrating that they've had it and you've discussed it. I think a lot of the firms as well, if they charge a fee, they might have a separate fee agreement where they get the customer to sign it. That's a different matter. But your standard document, it doesn't need to be signed. It's your choice whether you want to put that layer in the process.
Thank you. That covers the question. It's about evidencing. How would you be confident if the regulator came to you and said, can you show us that the client had this? What have you got in place that you can do that? Excellent. Thank you for that. The other point I want to pick up on that you mentioned there was referrals. I think that's a really good point. I think for too long, brokers have thought they have to do everything themselves. We have to do this for the customer. We have to do that to the customer. There's no harm if you can't, don't want to, don't have the time, don't have the knowledge, whatever it is, referring that customer on to get that best outcome. We've launched a referral arm over the last few months here where we're encouraging brokers to refer us specialist mortgage cases because they do take longer. There's no hiding away from that. They are different to a standard mortgage process. So we've got a team of advisors that will take that customer through that journey, provide the advice and handle that for you, still keeping you in the loop. So certainly look into that referral option, making sure the customer gets the good outcome that they're looking for.
Yeah. Again, I know I've not got the facility here to share slides, but a couple of slides that I added to a generic mortgage advisor event I did back in September at Manchester. I talked about protection again because I want to, but it was about doing that proper job with the customer. We talk about consumer duty. I flipped the words. We have a duty to the consumer to talk about protection and carry that out, that holistic approach, as it were. I mean, I had a one-to-one advisor back end of last week. They were doing about 20 odd mortgages a month, so clearly pretty busy. But they quite openly said, we know we're missing a trick here, in terms of, let's face it, income to the business and us not talking to the customer, but we don't want the customers to suffer. So we've got that clear referral process in place so the customer gets looked after. Because what you don't want either is that call to you, that unfortunate call that, unfortunately my partner's just been diagnosed with cancer. Did we discuss it? I'll just put you on hold. I'll check the file. Hopefully you did, and you've got a record of what you did. And if they didn't want it, Did you record why they didn't want it? So again, this kind of consumer duty highlights that fact that we need to look after the customer. And for those who did attend or see AMI, so the Association of Mortgage Intermediaries, they did their protection viewpoint perception gap, wherever it was, a couple of weeks ago, where they do not mystery shops, surveys to customers asking whether the customers understand what they had and why they had it. Did the advisor talk about protection? There was improvements, but still a lot of work to do. So I know we might have got off on a slight tangent talking about protection, but the protection falls under this part of consumer duty, that we're doing that whole holistic approach. You are authorised to talk about protection, so you should do. Easy for me to say sorry when you're busy doing mortgages, etc. But as I said, refer it on if you haven't got the time to do it.
We'll move on to a couple of other topics, because we're running a little bit light on time and the questions are absolutely flying in at the moment. So brilliant. Thank you. Please keep those questions coming in. We'll pick up as many as we can. To move on to fair value assessment then. We had a question in advance around lender arrangement fees. Obviously, there's been a lot of scrutiny on fees and percentage fees and this, that, and the other. And one of the questions was around how lenders can justify high arrangement fees that aren't the best value.
Yeah, okay. And I guess it's just an opinion. But funnily enough, this was brought up at the session yesterday. And a couple of lenders, lender key personnel were on the stage just having a bit of a panel debate. And it was just all about price, cost, etc. I don't know if you know, and when I spoke to most people during these September roadshows, most people did not know that the lenders have to carry out their own fair value assessments. So if you go onto the lender's website, or not just lenders, providers, you will see their fair value assessments where they have to demonstrate to the FCA that they've carried out a fair value assessment on their products. Take, for example, their first time buyer products. And if there's a cost, if there's a fee, that they have to justify why. Now, they do that. They're happy with what they've done. So to some extent, it's kind of, I don't want to say it is what it is. We have to kind of just say they've done it. They're happy with what they've done. We see it. If the customer's got an issue with paying a fee, we're talking to the customer. Do you want to pay a fee? If not, if so, how much? There's a, it might be a better rate, but there's a more fee, and it's balance and obviously discussions with your customer. If the customer doesn't want to pay a fee, then you go down to the next product and you're justifying your suitability letter why, cheaper products would have been discounted. So if I can just quote as well, and I picked this out to make a note. So I can't remember what lender it was, and that's irrelevant. They're all pretty similar, to be fair. And by the way, these fair value assessments are not to be shared with the public, not to be shared with your customers. They're just business to business documents, but be mindful that they exist. Gain knowledge, go and have a look at them. It just simply says we offer different product fee options, and these are reflected in the rate, i.e. a product with a fee charges a lower rate than an equivalent product with no fee. So, we can debate whether we think it's acceptable or not. It's just weighing up what the customer wants, establishing their preferences. And the key thing is as well, if you've got concerns, talk to your BDM, because the consumer duty as well is all about interaction with everybody else, the distribution chain. That's a key phrase, not just the broker. Talk about whoever you're speaking to and kind of feedback, gain knowledge.
That's when ultimately it's a cost of the product, isn't it? If the lender can justify it, which they will have done, and they'll have assessed that, and low rate, high fee, etc., being a good example. If the client doesn't want that, or we don't want to recommend that as advisors, we don't have to. We can move on and select the next product. There's a choice out there. It doesn't mean that every product has to be homogenous under consumer duty. It just means there needs to be a choice, and it needs to be justifiable.
Exactly. And again, if I think back about the arrangement fees, where we have to positively elect anyway, but obviously we've got to make the customer aware that there's a fee and whether they want that added. But again, that's just you questioning that. I'm sure all of you do anyway. You're happy to pay a fee. Yeah, well, this is this one. If not, we'll move down, and this is the reason why we've discounted that particular lender.
Yeah, perfect. Thank you. Hopefully that covers off that question. Thank you for that. We're getting a few comments about the posters in the background as well. I think we've got some Spurs fans on the call.
Right. Okay. Yeah. So that's a calendar. Funnily enough, that's and I'll rub it in. My boys bought me that back in 2019 when we got promoted. So that's stopping up. Yeah, but any Spurs fans, it's a good job I stopped to the end of that particular game. Fantastic. But anyway, yeah.
Thank you. So sticking on fair value assessment for a second, we've had a question come through live. Do you need to have a fair value assessment on each case, or is it only for the products that you're offering?
Right. Okay. So another thing about fair value assessments is ideally you will be carrying out one yourself. SimplyBiz, we created one for our members to carry out a fair value assessment to make sure your sales process is fair value, is fair, and obviously if you charge a fee that it's fair. So that's something to bear in mind as well. Going back to the lenders, you do not need, to my knowledge, you do not need to keep the product fair value assessment on your customer file, okay? There's no requirement that we've seen that asks you to do that. The fair value assessments that I've seen, when I say product specific, what I mean is first time buyer, remortgage, product transfer, that type of thing. But as I say, one of the action points from today is go on and just say, for example, I was going to say another lender, but tandem fair value assessments. There are plenty of other lenders out there. Tandem fair value assessments. Key in Google, it'll come up. Go and have a look. Become familiar with the documents. But it's our knowledge they are not required for your customer file. Just be mindful they exist.
Excellent. And we'll touch on this a little bit later on when we look at the differences between reg and non-reg. But we've had a question in around buy-to-lets. A fair value assessment is required on buy-to-let mortgages.
That's a good point, because you could argue that your non-reg stuff's out of scope, as it were. I'll be honest, I've not checked out any buy-to-let lenders to see if any fair value assessments exist. So I'll have to waive that one.
We've seen a few,
yeah,
but this is probably more from lenders that offer a range of products that will do first and do buy-to-lets, and obviously the FCA don't particularly like firms treating things differently. If you are a regulated business, you've got regulated responsibilities regardless of what type of business you're doing. And again, it comes back to customer outcomes and things like that. So there's a few around. We'll have a look at that and probably pick that up off air if that's something that we can come back to you on. So moving on to, again, time's flying by, so this is brilliant. Probably the most questions we've ever had through on a live webinar. So it just shows how good the content is for this one. Looking at AI, a big topic that's making the news at the moment. What do brokers need to be aware of from a compliance viewpoint regarding the implementation of AI?
Again, we had this debate when AI was brought up, didn't we? And forgive me if we've got this wrong. We kind of thought it might be along the lines of your customer due diligence checks that you do, your electronic ID checks. Yeah. So I'm going to focus on that particular point first. I think adding value to your sales process. If you add an electronic ID check, it's certainly going to add value to your sales process. I know there's a little cost to that every time you might do one. There's plenty of options out there. But again, that's going to save the customer time, going to save you time. It's going to enhance your customer due diligence, know your customer checks. But there's always that disclaimer where some of the lenders still want to see your traditional copies of ID or proof of address. Now, for me, without naming names, going back to the network that I used to work for, the electronic ID check would be your primary check. So if that was okay, job done, okay? If you then wanted to ask for copies of ID and proof of address to complement that primary check, fine. But we would still recommend, if you're not doing an electronic ID check, to obviously still get your original paperwork. So AI, I've referred to this session that was on yesterday again, but funnily enough, AI came up, and all they talked about was, well, remember when we talked about robo-advice, when we thought that was going to be a threat, when that was coming in? Has that materialised? Has that really came into force, robo-advice, and took away the need for you and your face-to-face advice, or face-to-face over Teams or whatever? The soft facts that you talk about, the open questions, the way you get to know your customer to do that proper job and build that relationship. The only thing they talked about really was robo-advice, not really materialised. The chat bots, I think, when you might ask, they might ask basic chat questions. I mean, I get frustrated when I go on my Barclays app and, it comes at the robo chat, and I kind of go, right, how are you today? You get no answer. So it's kind of, they have specific answers and questions where they will learn. Will that ever take off? Never in my eyes. How could it when you've got good people like you on the call? But so for me at the minute, personally, I don't think there's any kind of concern or anything that we need to be mindful of that's on the horizon. But feel free to kind of comment if we've got the wrong end of the stick by AI being brought up.
I think that's a good point. People deal with people ultimately, don't they? And that's the key thing. And we've still got an issue. I firmly believe we've got an issue in this country when it comes to financial education. I think there's a lot of people that can't properly read bank statements. There's a lot of people that don't understand how the bank account works and how all that happens. So if we go down that purely AI route, robo-advice route, you rely on a certain level of knowledge from the borrower.
Yeah.
Which for a lot of people just isn't there. People want to talk things through and understand how things work.
Of course, it's a massive transaction, as we know, buying a house or remortgaging or taking out a protection product. But another key thing is you might have a non-advised kind of sale where there's no interactive dialogue, where the customer just might go on, scripted questions, whatever. So there's no dialogue with an advisor, just all electronic. That's not AI. That's just on a website platform. So again, let's just see what happens down the road. But for me, you carry on doing your grand job.
Thank you. Good customer outcomes we've touched on previously. Looking in a bit more detail than that, prevention of foreseeable harm, I think, is one of the things that Consumer Duty talks about. We've had a few questions coming on this front about how far does that scope reach? For example, historical problem, client doing a debt consolidation, but then doesn't cut up the credit cards, or a broker, a bridging loan where the client says they're going to sell the property, but then removes it from sale shortly afterwards. How much, in your opinion, do you think the regulator expects a broker to be doing?
Yeah, I mean, I swatted back up on this, funnily enough, yesterday. They talk about foreseeable harm really when kind of a lot of the banks, whatever providers are designing products. So obviously before the products, come to light, as it were, and assessing whether something could cause harm at a later date. Now, if we touch on, well, let's just touch on that debt consolidation one, for example. In theory, people are coming to you as adults. So you would hope that after this has happened, if you're doing a debt consolidation, that they will be sensible and then not go back into debt again. But it does happen, as we know, and they might come back to you again. But you can't keep servicing continual debt consolidation cases. They need to be referred then to a specialist. We had one, a firm that was based in Southampton, where they had, it was raising funds for home improvements, allegedly, but it turns out that she had a gambling problem. So with the funds, they paid the gambling debts off, but then 6 months later, they came back with the same, wanted to raise funds again. And obviously the firm got to the bottom of it and said, look, we can't help you. We can't keep helping you out in this position. You need to go and get help. So you can kind of only give advice to somebody at the time. You can't judge most things of what might happen in the future. You do have control of things. Say, for example, your product switches. The customer's going to get a payment shock, a payment hike. You need to get in there. Again, just before I forget, you generally in your diary systems will have 3 months before the product maturity date, where if you're using your diary active 3 months, change it to 6 months, get to the customer well before. The lenders are writing out to the customers, and most lenders do ask you or ask the customer to speak to you. But there's still only about 50%, 60% of the product transfer market being used. So there's still potential opportunities out there to get product transfers. Again, your protection, things will happen. So again, just build that protection into your sales process to prevent any harm in the future.
I think something you touched on earlier as well can jump into this with when do you contact the customer again? If we've done a remortgage for someone, you might want to contact them 6 months later. If they are doing that consolidation, contact them after 6 months and make sure they've done what they said they were going to do. If not, there might be additional opportunities for you to help the customer there.
Yeah, definitely. I mean, obviously, a lot of your mortgage offers now, they'll have the conditions on there to pay off certain accounts, or to provide evidence of home improvements or whatever. but it doesn't always mean it's followed through. So again, dare I say, you have to rely on the customer to do what they've been asked to do by the lender as well, by the way. Dare I say, a legal requirement to do that as a condition of the mortgage offer. But yeah, you can only do what you can do at that time, and then review the customer if you've got time, at least annually. Circumstances change. Don't leave it till 2 years down the line or 5 years down the line when you go and do their new deal or whatever. Try and keep in touch with them as much as you can. And let's face it, look, the bigger firms have got time to do that. They'll have what they call the 666 or the 999 process. Contact them 6 weeks, 6 months, 6 days, 6 weeks, 6 months, whatever. After completion, on completion, another thing about feedback. Obtaining feedback is important. We touched on that. We've got vouched for as a platform, for example, Google reviews, a completion call as a minimum. Hello, how did you get on? Can you provide any feedback? Or email them so they can come back to you. A completion email is a minimum to get that feedback.
Excellent. Now, a topic that I know we've spoke about prior to this call as well, that we're hearing more and more about, lender panel removal.
Right.
What trends are you seeing, and what can brokers do to help themselves with this?
Okay, so how are we doing for time? Right, we're doing okay for time. At the end of the day, if I waffle on a bit and people can hang on, we might finish on time. I don't know. Again, it's too late, isn't it, when we get a panel removal? I can't imagine how distressing it would be if I'm a sole trader here sitting in my bedroom at home and I get a letter through the post from whatever building society you've been removed off that panel. No matter how big or small that lender might be, it must be pretty distressing for somebody. So it's all about preventative measures as well, which I'll come on to. If you work for a network, if you're removed from panel, you've obviously got to support the network to appeal that. If the network believes, there's an appeal that can be done, justified, should I say, the network have the advantage of going in to see the files there and then if they want to. If you're directly authorised, you're probably going to struggle more. That said, this is why, again, it's still important to have support from a mortgage club, whether it's just file checks, whether it's visits, whether it's communications, because they can then look at your files and identify any issues early on. Sometimes a lender might share some information, that with you to kind of give you a little bit of heads up. They won't specify, but the common issue for me, and particularly with fraud as well, which we'll come on to, is still income and employment. Okay. So your checks, what have you done? The lenders, I mean, I've been involved with a couple of panel removals recently, and I'm going to touch on those. One lender letter did not have a reason why. The other lender did, and it clearly referred to income and employment. Okay. So let me just talk about those two examples. One, both of them were a few years old, by the way. So then coming to ask for help a few years after a lender panel removal letter is too late. So with the mortgage club, you've probably got two options. You can just, or if you're directly authorised, you can just appeal now and just respond to the appeal letter and just say, this is what we've done since the letter and this is what we're going to do. What fraud training have you done? We've told the PI, we've told the FCA, we've looked back at the files that we've had issues with. We've identified trends. We've updated our checklist. We've updated our sales process. We've shared issues. This is what we do. This is what we're going to do going forward. We're going to look at 100% of monitoring, whatever. Fingers crossed, you hope for the best. So that was one example where we just told one DA firm, these are the things you can put in your letter, but you must personalise that letter and elaborate on those points as the business principle. But then one firm engaged with us. She's had a few visits. She had a number of files that were unclear to start off with. And we said, we can't really support that. So you need to have more suitables. So she engaged, she really worked hard. And this year she's had about a dozen suitable files. So her visits have improved, low risk, suitable files. We as a club are able to kind of support that and say they've engaged us, this is the outcome, we're happy to support it. Hopefully you will, overcome that appeal, as it were. But for me, shall I kind of go on to fraud while we're on that kind of subject? Because the thing, as I say, the panel removals, it just depends. But it's normally income and employment from what I've seen. Quality.
In there for a second. I think that the quality is a key point. I think, especially lenders that use portals a lot more, we see it ourselves. We've got a portal and we ask brokers to submit information through there. We do the same. We submit information to lenders via portals. And I think it's easy to forget that if you use portals, the lender only gets a view of what you've sent through, and that's based on the information that you've provided. Mm-hmm. You might have a full explanation about what's happened. If you don't provide that explanation, the lender's going to interpret the information you've given them in a certain way. So I think, I'd like to think a lot of brokers are doing a good job and try and do a good job, but it might be the fact that we're just not clear enough at times about what we're trying to explain.
And another good point is to ensure that the data on the application form matches the data on the fact find. Some of the lenders can ask to see customer files, fact finds as a minimum. So it's important that that consistency is there. Start dates, for example, of employees, income. A phrase I used to use in training was, when you're using the online platforms with your lenders, key what you see. Don't round up figures from your pay slips. Key exactly what is on the pay slips. Quality is important. Good point. So again, the time at previous network where we would have the lenders have what they might call watch lists. So if there's issues with the quality, say for example, the debt that's on the application form doesn't match the debt that's on the bank statements. So the advisor hasn't really underwritten the case, submitted it correctly. If it doesn't improve, they'll get struck off panel. So quality is important, as well as your fraud issues, as it were, like income or employment. Quality is important. Good point.
Move on to fraud now. Thank you.
Yeah. Okay. Right. Still alive and well. No doubt about that. So you've still got to be on guard. And again, coincidentally, I attended one of the top 3 banks, shall we say, a fraud session, annual fraud session last Wednesday. I made plenty of notes. I'm going to share some of those notes because this is real, up-to-date information. They clearly sent the message that fraud is still alive and well, that they carry out their checks with the applications, with the brokers, just to ensure integrity of their panel, which all lenders should be doing anyway. So again, I would ask the audience, but I can't. The main common issue is still income and employment without fail. For residential cases, I'd like to say, have a guess what percentage of cases declined due to income and employment? What percentage? 96%, a massive amount. Buy to let, 66% of cases declined due to income and employment, 23% scheme abuse. So it's still out there, and we'll come on to why in a moment. But staged income. So for those that don't know what staged income is, we could do a whole session on fraud, but staged income. So somebody probably just getting a second job prior to the application going in to make the case fit, or a convenient pay rise prior to the case coming in. Salary credits going into a bank from somewhere, it could be a potential employer, just to again make the case fit, but then that salary or the chunk gets taken out. Introducers, still a big one. If you're getting introducers, carry out your due diligence on those introducers. This is what I said at the beginning about the new business register. Keep an eye on where your cases come from. Okay, these individuals could be people that have been struck off a lender panel and now just trying to try it on. You should only be getting from your introducer a name and contact number. You should not be getting paperwork, illustrations, ID, meetings with the customer. The introducer should just be introducing the case to you. Okay, for an estate agent, it's a little easier to go and see them, but use Google, look at LinkedIn, whatever, due diligence. And again, why are they doing it? They can't have the house they want because of the current climate, for example. Squeeze on income, cost increasing, image. First-time buyers is still a key risk area. So carry out extra scrutiny and due diligence. explain the consequences of non-disclosure, collect all previous addresses, not just 3 years or whatever, or 5 years. So again, it's still out there. There's a couple of examples that they gave that was property hijack, which again, without going into the details, where normally unencumbered properties have been hijacked basically by fraud. And those cases all involved high net worth, well-paid people for big companies, which were all false pay slips. Be careful now with false pay slips. It's not just false pay slips where I can go and buy them from Replace Your Docs, for example. It's doctored pay slips where they took a decent an original pay slip and then doctored it. So be mindful of that as well. These examples they gave of these property hijack could have been avoided if people had just used Google. Google is your friend. Do not forget that. Google, your company's house, the employer's website, LinkedIn. If you've got something that's well paid, in theory, they should be on LinkedIn. Most people are on LinkedIn now. So use Google, company's house, as I've said. Any tips like that? And let's face it, call the employer, go back to basics. You're trying to prevent the case from being submitted. Do not submit it. Do not submit it if you are not comfortable with the case. So again, is it plausible? Don't hesitate to talk to the BDM. Reasonable, where do they live against where they work, travel, etc. Sustainable was another word that this lender used the other day. Is the situation okay in the long run? So lenders will continue to monitor brokers and the quality of applications. Key message is try to get it right first time. Something might slip through the net. But if it does and you get questioned on it, as long as you can evidence the checks that you've carried out and you've done what you think you can, with the facilities that you've got, then hopefully that will stand in good stead for you. But again, obviously, just do what you can to prevent it from going in and checking it before it gets submitted. But as I said, we could do a separate session on fraud, to be fair, show examples, and talk about it. But it's still out there. You're still going to be on the guard.
Brilliant, thank you. We're seeing more of that property hijacking as well, where especially through the pandemic, where solicitors weren't meeting clients face to face. So when you look at vendors, for example, no ID, no AML carried out on the vendor, and it's an undervalued purchase. So we're seeing a surprising amount of that kind of stuff trying to get through. But it's just about being vigilant, identifying it, questioning it, getting the evidence to support it, or ultimately walking away if you're not satisfied yourself.
Yeah, good point. Another good thing to mention, an action point for everybody. Some of you might know it, but the HM Land Registry, they have a property alert function where you can register your property with them. And then if there's any kind of weird activity going on against that property, it will tell you. It does tend to benefit the unencumbered properties, but you can still register a property. So that's not just for you as a person on here now for your own properties, but for your customers as well. So that helps. So again, the property hijacks that happened with this lender, a couple of them did actually go through and the lender lost money. If the properties were registered, it would have highlighted this activity with the customer and would have prevented that from happening. So your HM Land Registry property alert function, go and take a look at that as well.
Thank you. We're running very short on time, so we'll just cover off one last topic, if that's okay with you, which is a big one for us and a question that we get asked a lot, and I've seen some questions come through today on there as well. How does consumer duty apply to commercial finance?
Right, again, let's try and finish on a high and positive, as it were. That we've done so well, but I think that strictly speaking, you can argue that any kind of unregulated business that people do is outside of scope of consumer duty. But for me, in terms of sales processes, again, just trying to have that overriding factor of achieving good customer outcomes, because just we would try and match the sales process as closely as you can to the regulated sales process. That's the key message that I will give, because again, just talking about a couple of things, the principles for businesses, of which there were 11, the fundamental obligations of every authorised firm, there are now 12, which includes the customer outcome, the consumer duty one, and the 5 conduct rules for everybody. There's now 6, again, relating to customer outcomes. So everything that we do as an authorised business, authorised environment, We're just trying to achieve good customer outcomes. So I'll just closely match as possible to the normal regulated sales process.
And again, it comes back to something I mentioned earlier. The regulator, if they can see you operating two different business practices, one for one customer and one for a different customer, are you really treating your customers fairly? So although you're a regulated firm, you still have an obligation to look after your customers.
Exactly. And I was going to bring up product transfers and what to do there, but I'm not going to, because that's going to create a whole new debate, which I don't want to get involved in. But yeah, again, if I may refer to the time at the network, and it's good to refer to what happened in a network, because obviously when they've got hundreds and firms and advisors are all over the shop, they have to have tight controls and robust systems and controls, solid oversight and monitoring. So their kind of their processes will be robust. So we always said, closely match the regulated sales process of sales as much as possible. So still have the relevant documents that you would have on file. Still issue a suitability letter. Might not be a 6-page, might be 1 or 2 pages. Some people might say, I'm not going to bother because it's non-regulated. Your choice. But again, it's, can you still get a complaint? Yes, you can. Who would deal with it is another matter. But, you still want your file to be robust enough to defend any complaint that you may get.
Yeah. Again, reputation comes into that as well. If your website's full of 1-star reviews because you've handled a commercial case badly, that's going to impact on the core part of your business as well.
Of course, yes. Yes, that's a good point.
Yeah, excellent. So we've talked a lot about SimplyBiz Compliance Services, about your background and what you've seen previously. If any of the brokers wanted to get further advice about things, how would they go about doing that?
Just feel free to message me. Simple as that. Whether they've got any queries they want to talk through, depending on who they're with, or they actually want support. We've got plenty of people out there that can offer support, all different types. Whether it's just a visit, whether it's just a file review, whether you want to engage with a smaller of a club, please just let me know. I don't know whether you've got the email. Is it s.lovell? S.lovell, I should know this off the top of my head, but I was told to take the email down. I think it's s.lovell@simplybiz.co.uk.
Excellent. And I'm sure, given the popularity of this one, that we'll certainly be bringing this forum back in the very near future as well, where we can cover off some of the questions that we haven't had time to answer today. Maybe we'll do that forward session and we can look at some examples there.
Of course, if you want to do a session on, fraud, or a session on protection, whatever, anything subject matters, as long as Chris and Chris are happy to do it, then we're happy to engage. And it's just all about education, sharing knowledge, and dare I say, if we talk on fraud, just reducing fraud across the industry. That's all about working together.
Excellent. Couldn't have said it better myself. Simon, absolutely brilliant. Thank you so much for this morning. It's very helpful topics. As I say, we've had the most questions that have come through on any webinar we've done. So you certainly hit a nerve there. Excellent. Thank you for that. And we'll be in touch shortly with new plans and what we're going to do moving forward. So following up from this, we'll send a quick survey out. We'll just ask you what kind of topics you want us to cover next time, and then we'll pick that up. So all that's left to say from me.
So I know people might have to go, and that's absolutely fine. I thank everybody for attending. I'll go and have a lie down now. But we've asked somebody asked about the key. I didn't want to look at the answers.
CRM systems. Yes.
Are you okay for me just to pass comment on that? Because I know we're finished.
Yeah, feel free.
So to my knowledge, the key on its current version, shall we say, will be shutting down within the next couple of years, say. But they have got then a new one, which is, I think it's called CRM Brain. There are plenty of others out there. We work in partnership with the Mortgage Brain, so that'll be coming on board 360. There's plenty out there to work with. You've just got to try it to see what suits you, and pay particular attention to the data migration as well, because obviously you don't want to take a new system in there. So don't drop the key altogether. Speak to Mortgage Brain, because they've got CRM Brain, which is their new, better platform than the key.
There you go. Tech advice as well as compliance advice. Brilliant. Look, let's wrap up there. There's a few questions we're not going to get to cover off, but we'll try and pick up on those separately. Simon, brilliant. Thank you for that. Okay. Very helpful as always. Attendees, thank you so much for joining us today. Hopefully you found that interesting and we've covered off some of the points that you wanted to look at. Please feel free to join us again at the next one. As I say, we'll send some material out afterwards, trying to get some feedback on where we're going. All that's left for me, thank you. Stay safe, stay busy, and we'll see you next time.
Yeah, all the very best. Thank you, everybody.